The political demise of the worldwide system is really starting to rot away further. And that usually is based on trust. And the monetary system is based on. So as you lose trust in the political structure, continue to lose trust in the monetary structure, and you go into what you do trust. Gold and silver have been trusted. Is that perfect personal assistant as a metaphor that could do never anything? And there's three things out there in the future that we need it for that we don't even know about. That's silver. So why is it less valuable? From a utility aspect, it's superior to gold in many, many ways.
Silver prices have been quietly building momentum in recent months, gaining ground as a wide range of economic, industrial, and monetary factors align in its favor. While gold has captured much of the spotlight with its continued climb toward historic highs, silver has been moving with increasing purpose, offering what many experts believe is a stronger upside potential. The gold-to-silver ratio remains unusually elevated, and according to veteran precious metals analyst David Morgan, a move back toward the 40-to-1 range would mean silver dramatically outperforms gold, potentially rising at more than double the pace. This divergence is drawing renewed interest from investors who view silver not only as an affordable alternative, but also as a strategic asset with significant growth potential. Silver's unique value proposition lies in its hybrid nature. It's both an industrial necessity and a monetary metal. As Morgan points out, silver is the indispensable metal in technologies that power our modern world. From electric vehicles to solar panels, 5G infrastructure, and even AI hardware. This steady industrial demand, paired with a global trend toward de-dollarization and monetary uncertainty, makes silver one of the most dynamic assets in the current environment. Moreover, its accessibility gives it mass appeal. At investor conferences and financial summits, Morgan notes that first-time metals buyers are increasingly choosing silver, not only because it's undervalued, but because it's readily available through retail dealers and online platforms. It's simply easier for everyday investors to accumulate silver, and they intuitively recognize its historic discount relative to gold. What could truly ignite silver's next major move, however, is a supply squeeze hitting the headlines. David Morgan warns that once industrial buyers begin struggling to secure physical delivery, whether due to mine production limits, logistics, or investment hoarding, the story could gain mainstream attention. A delay in large manufacturing orders could trigger a surge in retail and institutional demand, resulting in significant price appreciation. In Morgan's view, silver has the versatility of gold, but with an industrial edge and scarcity that make it the ultimate undervalued asset in the current market. With these dynamics in play, he urges investors to consider their exposure seriously. Now, we present the clips from David's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
So there's several things. Point number one is the historic gold-silver ratio. So just to go back to like 40-to-1, silver would outperform gold by over double right now. Secondly, the market's much bigger knowledge base. In other words, someone that's brand new to the metals, let's say someone's been a stock market investor, they're at the money show, their portfolio really hasn't done much. It's kind of going sideways. And they hear, someone at the conference, and may have been Albert Liu, who was with me, might have been some of the other precious metals guys. And it makes sense. I want to put 5% into the metals. So they're going to look at gold. They're going to look at silver. They're going to say, gold is really kind of at an all-time high, but silver is really undervalued. So I think there's a lot of factors lining up for silver that it's easy to access. I mean, you call up a coin dealer anywhere in the States and say you want to buy platinum, probably 90% of them are going to say, well, we don't deal in platinum, or give me a couple of weeks, let me find it for you. But silver, they're going to have ready access to it. Or if they don't have it, they're going to be able to get it pretty quickly, especially right now with the retail side being so flush with product right now. So I just think there's more knowledge about it, easier access. It's the best known. And so because of all those factors and the squeeze, I mean, if we could, get in a situation where silver starts to make the news because XYZ manufacturing just put a big order in for silver, and they were told They cannot get it delivered for 4 weeks or for 8 weeks or whatever the case may be, and that hits the financial press. Uh, People are likely to pay attention. It's hard for me not to be biased. I am, but still, I'm trying to be as objective as I can. If I had to put a bet on it, I'd probably go with yes, it's a hybrid metal. Or actually, yes, it is a monetary metal, but no one really knows that. I mean, unless you're studied from the Austrian school or a metal's head, platinum really has never taken any real merit as a monetary metal. However, if you look at the classic definition of money, it checks all the boxes. So it's primarily industrial. But what moves the market again, as we all know, is the margin. Where is the demand coming from that's starting to push the price higher? Well, if industrial is steady state, it's the same every year. It's not, but let's just say pretty much it is. Then where's the added demand coming from? Well, that's investment demand. Is that monetary demand? I'll just call it investment. But that investment demand is pushing it higher and higher. And jewelry, a lot of the Asian countries don't really know, excuse me, a lot of North America doesn't know that the Asian countries look at jewelry differently than we do in the West. A lot of Asian countries look at jewelry as jewelry and a savings plan. They're buying gold by weight, they're buying platinum by weight, and they're buying it as a bracelet or a necklace or earrings or a ring, but to have it and enjoy it, but they also look at it as a savings. So the cost markup in the Asian markets is much less than you have in the United States or Canada. And because of that fact, I mean, you go into Dubai, I mean, you're buying it pretty much by weight. So you're getting the artwork almost for free. There is a margin, but it's a different market and it's a different perception of the market. So the Chinese have been buying platinum as their favorite jewelry. I'm not saying it's taking over the gold market, but many have moved to platinum because it is 15 times rarer than gold and it's a lot cheaper than gold. So you've seen kind of a shift into not only investment demand, but fairly a noticeable increase in jewelry. I don't want to make a bigger case out of it than exists, but it's moving the market. Corny analogy, but I haven't said it on your program. And so, if I need a personal assistant. I need someone to help with my schedule. I need someone to book the live events. I need someone to proofread my papers. I need someone that can do a lot of things. So if I put an ad out and I get someone and that person comes in and says they can do Excel and a Word doc, but they can't do graphs, they can't do accounting, and I come in and I get someone else and that person can do everything I can imagine, and then it gives me three things I haven't thought of that are in the future that'll be useful to me later on. Which one is the most valuable to me? Well, obviously the second one. And that's kind of the contrast between gold and silver. I mean, gold sits there looking pretty, so it's jewelry. It's been a monetary foundation for thousands of years, but that's all it does. But silver does everything that you have in a technological environment, from a flat screen TV to cell phone or microwave oven to membrane switches to AI to power distribution to power control. I mean, silver is that perfect personal assistant as a metaphor that could do never anything. And there's three things out there in the future that we need it for that we don't even know about right now. That's silver. So why is it less valuable than gold? From a utility aspect, it's superior to gold in many, many ways. So it's just a thought experiment. I am a silver bull. I have gold. I've always recommended both, by the way. And also my report, the Morgan Report, delves into all the resources. Just want to get that out there, shameless plug. But oh, well, I already know all the silver stocks. I really don't have that many silver stocks in the portfolio right now, but the ones I do have are kicking ass, excuse me. And three of the picks I have been M&A. Mag Silver, one of my favorites, merger and acquisition, Pan American took it over, and two more. So good stock picker, or at least above average. I'll say that it's true. But some of our good picks are getting eaten up by bigger companies. So anyway, back to you. I'll give it back to you before I go too far off. On a tangent.
While gold continues to dominate headlines amid rising geopolitical tensions and increased central bank buying, silver has been quietly staging a strong performance. Unlike gold, which is primarily driven by its role as a safe haven asset, silver is benefiting from a powerful combination of industrial demand and favorable market momentum. Nearly 60% of silver's global demand is driven by industrial applications, including solar energy, electric vehicles, and electronics. The clean energy transition, in particular, has been a game changer. Demand for solar panels alone is projected to rise by 20% this year. However, the silver supply has not kept pace with demand. Since it is typically mined as a byproduct of other metals, investment in primary silver mining has remained limited. This underinvestment has led to a supply deficit for 5 consecutive years, resulting in tighter availability and driving up prices. As a result, silver has not only outperformed gold in recent months, but also outshone broader equity markets. This trend is increasingly visible in investment flows. While gold ETFs have remained largely steady, silver ETFs have seen a surge in inflows, with one recent month alone recording nearly $102 million in new investments, almost 3 times the amount recorded by gold ETFs. Analysts note that silver's dual nature makes it both more volatile and more reactive when global conditions align. Its appeal is further strengthened by the fact that it can benefit from both safe haven buying during uncertain times and booming industrial demand during economic expansion. Looking ahead, David Morgan anticipates that silver prices will likely test the $40 to $50 per ounce range in the years to come.
I think for the big picture, if we go back to the situation with the Ukraine problem, when the United States basically cut off, I think it was $300 billion from Russia, that was a big mistake. I mean, you might have an ideological difference. You might have even a reason for war. I don't think there is such a thing, but that's personal opinion. But you do not mess with the money system. That's sacrosanct, no matter how bad a dispute you have. But the United States did it. Well, that was a huge wake up call to the rest of the world, which said, well, if I don't align ideologically wise with the United States, are they going to to sterilize my deposits in US dollars? And so that really was a huge mistake. So if you carry that forward, I think that's permeated a lot of thinking in other nation states that, well, why do I want to buy bonds if they could sterilize them when I can buy gold? And you've seen this further run to gold by the central banks that's occurred over the last few years. It continues into 2025. And it's sort of the anti-dollar. It's a trade that is a universal, ubiquitous, everywhere, always trusted. There's no trust issue on the issuer. There's no worry about geopolitical whatever because gold is gold and every nation state will accept it. And so I think that is the main underlying process or thinking, whether it's conscious or subconscious, that really was the US shooting themselves in the foot. And it will continue. So now, with that base, you go on from that, what else has occurred? Well, uncertainty in the whole system continues to grow. And when I say uncertainty system, I'm not talking monetary, which is true, but more importantly, the whole political class on a global basis is being less and less trusted all the time. So it's not just the United States that's saying, what's really going on here? You know, we get these candidates and they lie to our face. They continually, swap around what they're going to do. They're totally inconsistent. And then there's this candidate that, let's say, was more favored, that they were more truthful than the average. And that's turned out to blow up. So, and that's not just the US. I mean, again, it's worldwide. And so the people, whatever nation state, whatever nationality, whatever political system they're under, are fed up. They're like, I'm done. I just want to be, do my thing, do my job, feed my family, love my family, and be left alone. But they're meddling with my work and all this stuff. So the political demise of the worldwide system is really starting to rot away further. And that usually is based on trust. And the monetary system is based on trust. So as you lose trust in the political structure, continue to lose trust in the monetary structure, and you go into what you do trust. Gold and silver have been trusted forever. Now, crypto has a huge trust basis as well, but it doesn't have the track record. And it also has, let's say, more issues regarding a fledgling industry, even though it's been around more than a decade. It's still a fledgling industry. It's still beginning. It's a newborn bird that's just coming out of the egg and it's trying to get its wings. A lot of failures, meme coins and, all these things that are the NFT thing, which is kind of a fad. I mean, there are uses for the NFT. I don't want to digress too much. So I'll just sum it up by saying this. The more we get an unraveling of the status quo and the more it accelerates, and it is, the more push into, I've got to look after myself, my family, and the best way I can do that is 1, 2, 3, fill in the blanks, store food, get a second job, cut back on expensive, buy some silver, whatever. Really not, although I would say that perhaps there could be political leverage if someone did do that. For example, the Swiss were pretty much the last to have a tie to gold, and their currency was stronger than any other currency because of that tie. And so, for political clout, you could do it, and I think it could and probably would separate you from the pack, and then you would have distortions in the market because the money goes where it's treated best. So you could have a big, inflow. But I wouldn't say, off the top of my head, and I'd like you to ask this question to others because there are many in my field that are very deep and wise, good thinkers. But I just think that, my take has been the same for years. And that's basically the system is run by an Anglo-American empire, and it's based on the monetary system. And the bankers don't care what your ideology is. You can be fascist, communist, democratic, constitutional republic, or a kumquat situation. They don't care. As long as they control the money, they don't care what your ideology is. So I still have that perspective. So what it benefits at the higher gold price, if they own most of the gold, it benefits them. So if they put out a crypto that's unbacked with modern money theory, and they just print with no backing, then that doesn't work. All right, step 2, we'll tie it to gold because we have the gold anyway. So they're right now, from my perspective, in a kind of a no-lose situation. They can float their dream of having MMT and everybody getting in line for the new system, get a new wallet, put it on your phone, cash just kind of disappears over time. And okay, and then again, I'll repeat and so, all right, step 2, we'll tie it to gold. Every Amero or every worldo, the world coin, is worth, 0.0001 gram, 1 grain of gold, there you go. So unfortunately, and I've thought about this for a long time, can we win? And that's kind of what my documentary is about is, the power and control and stress that money causes almost everyone. And it's because of the way it's used as a control mechanism. But if we had the money, let's say gold and silver were money and nothing else was, and the people had the majority of it, then that would be power for the people rather than the banks having the majority of it.
Over the next few years, silver is poised for a substantial climb as global industries increasingly shift toward advanced technologies that depend heavily on this versatile metal. The expansion of clean energy infrastructure, particularly in areas such as solar power and next-generation electric vehicles, is expected to boost silver consumption across multiple sectors significantly. At the same time, the pace of new resource development remains slow, with limited growth in primary production, which intensifies concerns about long-term availability. This growing imbalance between rising need and constrained output could catalyze a strong price rally. If supportive economic conditions align with continued demand from both technology and investment segments, silver prices have the potential to break into higher territory, with projections suggesting a move toward the $40 to $50 per ounce range as industrial reliance deepens and strategic interest builds. With these dynamics in mind, how do you anticipate silver prices will move in the coming months? Do you expect a steady climb or a sharp surge? Share your thoughts in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.